Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Ends today. Book at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
If you're collecting your prescription, don't assume you can claim it for free. Not all benefits entitle you to free prescriptions. And if you claim when you're not entitled, you could face a penalty charge of up to £100. Thankfully, there's a simple way to find out if you should be paying. Search Check Before You Tick online and use our eligibility checker to find out if your benefits mean you can claim for free. Or you can ask your pharmacy team. So always remember to check before you tick. This was brought to you by the NHS.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
European markets are just waking up after a relatively positive handover from Asia. We saw some stabilization come through in that region. The Hang Seng and the mainland Chinese markets actually ending in positive territory in contrast to what we saw yesterday. We're also coming off of a record close for the Dow on Wall Street yesterday. Shares in that main index driven in large part by Boeing, which rallied more than 4.5%. So creating an overall supportive environment for European equities to open up this morning. And now the Stock 600 has risen about 0.13% in the early moments of trade. This follows a flat day yesterday for the Stock 600. Some underperformance in the FTSE 100 yesterday as the pound rallied quite strongly after some Brexit developments came through. Nigel Farage announcing that he has withdrawn the Brexit party from those conservative held seats. He just came through moments ago saying that is it. They won't be pulling out of any more conservative held seats for now, but that has really been a boon to the Conservative Party and is perceived by the market to reduce the risk of no majority coming through at the election on December 12th. So a strong development for Boris Johnson. Let's dive into the different sectors and see what we're looking at here. What's behind that rally at the open for the Stock 600? At the bottom of the board here, we've got two sectors trading just a touch below the flat line. Looking right along at the top of the board, telcos, the best performing sector this morning. So starting at the bottom, healthcare, household goods, financials, food and drink, and chemicals, all just trading around the flat line. So no major moves to the downside here. In the middle of the board, we've got real estate, media, industrials, and technology. And then moving right along toward the top of the board, in the green, oil and gas. A lot of focus on the comments coming out of the ADIPEC conference in Abu Dhabi, where Dan, Hadley, and Steve have been covering all the latest, speaking to leadership in the oil and gas space there. At the top of the board, we got basic resources. Those shares are trading up about 0.7%. Autos and telcos round out the best performers of the bunch. And we'll dive into that auto basket in just a moment because that's one of the key sectors to watch. A number of earnings coming through and also President Trump due to give an update on trade. So this is just a picture of the markets, the different regions. Before we get into autos, a green coming through for the most part across the board here. We're just waiting on a first print for the DAX, but in autos, the industrials heavy index would expect to see that index open in positive territory right alongside these other positive moves for European markets. FTSE 100 and the IBEX leading the way. And there it is, the DAX just printing about 0.3% higher at the open. Well, as promised, let's dive into the auto sector. Green coming through across European car makers this morning. Leading the way, we've got Daimler up about 1.3%. PSA also up more than 1%. President Trump is expected to delay plans to slap tariffs on imported EU vehicles for another 6 months, according to multiple media reports. Now, the Trump administration has until Wednesday to decide whether to impose the duties, which were previously delayed in May. The White House declined to comment on the reports to CNBC, but clearly automakers reacting to those results, and those shares are performing quite well this morning. Let's dive into some stock specific stories. Continental has issued a gloomy outlook for the global auto industry, saying it expects passenger car production to remain stable at best next year. The German car parts maker, which warned last week that third quarter earnings would be hit by a slowdown in the sector, also posted a 20% drop in adjusted operating profit during the period, but Continental shares taking that news in stride, up about 0.7%. Infineon says it's feeling the weakness in the auto market, cautioning that it does not expect an improvement in the all-important sector anytime soon. The German chipmaker has lowered its full-year guidance, saying the economic environment is, quote, fraught with uncertainty. This despite posting earnings in line with expectations. And Infineon shares surging on the back of these results, up about nearly 7%. Perhaps some investor positioning playing into the strong reaction we're seeing here, given the magnitude of the jump there. That's fairly notable this morning, up in nearly 7%. Deutsche Post at DHL has meanwhile posted better than expected third quarter operating profit. The company credited the boost to solid e-commerce performance and growth at its freight division, despite lingering concerns over global trade. The German firm also backed its profit guidance for 2019, adding it expects a, quote, traditionally strong holiday season. So an overall strong report there for Deutsche Post, and shares up about 1.9% on the back of those results. Vodafone raised its full-year earnings guidance, citing an improved performance in previously difficult markets, Spain and Italy. The world's second-largest mobile operator returned to growth in the first half, as it also saw a positive impact from the integration of Liberty Global's German cable networks business, which it purchased for 19 billion euros earlier this year. Vodafone shares up about 0.6% this morning, so fairly muted reaction to those results, but holding firm nevertheless. Now, there were plenty of big winners in Alibaba's record-setting Singles Day shopping event. The company racked up $38.8 billion in sales, easily topping last year's record of around $30 billion. Now, according to Alibaba, 299 brands surpassed 100 million yuan in gross merchandise value. Some of the biggest European earners on the day were L'Oreal, Nestle, LVMH, and Philips. And we've, of course, been following all of these stories very, very closely, and we've heard from them that China remains a strong market. In particular, L'Oreal has been seeing a boom in luxury, a boom in China, and those results from Alibaba corroborate what they've said recently. With that, we'll hand it back to you at the desk. Karen.
Thank you very much for that, Juliana. Alan Miller has joined us, founding partner and chief investment officer at SCM Direct, and staying around the set, our guest host, Beat Whitman, partner Porter Advisors. I want to ask you about the UK market, because we've seen some comments earlier in the week from Moody's effectively putting the UK on watch around its credit rating as it looks at the policy paralysis in society and Parliament, and thinking this is not going to just disappear even if there is a Brexit deal with the European Union. You're looking at moving some of your bond portfolio into US Treasuries, and you cite some of the increased risk around UK government spending. As we count down to the election, just flesh out that asset allocation.
Earlier in the we've been shifting much more into hedged products within our bond portfolio, because we believe that the sterling has been undervalued, particularly when it got down to 120, 121. Having said that, now it's recovered, and now, if you like, there's a lot priced in to sterling which wasn't priced in before. It makes it more relatively attractive looking again at unhedged bonds outside the UK. And if you think about US Treasuries, you know, it's hard to justify why you can pick up 2%, near on 2% per annum, whereas if you actually compare with UK corporate bonds, it's virtually the same yield, and UK government bonds yield about 0.85% per annum. So it's now looking interesting. We haven't held US Treasuries since we started. We held inflation-linked a long time ago in the States, but we now think it's starting to look interesting.
Jump in. What do you make of that trade?
Well, I guess looking at these yield differentials, the currency question is probably the important question, because they can easily add or delete whatever you do on that yield spread. So what is your view there?
Well, I think at these levels, whereas before we thought that pound against the dollar, the pound was probably going to move gradually towards 140. I think whatever government there is going forward, I don't think it's actually going to recover to those levels. And I think actually with the increased spending plans, the increased financing plans of either government, I think that's going to put a kind of lid on sterling, essentially.
What about a short-term squeeze high? Because we saw a lot of action in the price yesterday as Nigel Farage just said he wouldn't stand about 300-plus candidates in key Tory seats at the next election, almost trying to get Brexit done effectively. We saw a pop on that, but news this morning that that's it. It's not going to tackle any more seats, and there's been some expectation, given there were 600 seats initially they were going for, that maybe there would be further movement by Farage. So isn't there potential that there could be a short-term squeeze on a positive outcome for Boris Johnson?
Well, it was interesting yesterday, the pound rose about 0.8% after the announcement. By the end of the day, it given up half of it. So again, I think there's already quite a lot priced in. So whilst there'll be maybe a relief rally, on the other hand, there's still a lot of uncertainty ahead. It's not over.
Well, life is uncertain, and Brexit for sure. But I think the bigger picture is the dollar is the more important currency. And for me, the question in that respect is less so the Brexit view or so, but we have a kind of reflation and a cyclical bounce back in the global economy. And the dollar has been strong year to date. So the flip side of that is the dollar becomes weaker, which is positive, of course, for the US in terms of economic performance. So the question for me is more, how will pound sterling, given that Brexit uncertainty will just go on, hang parliament and all that, but not a clear outcome, which is probably most likely, then it will be driven by a weakening dollar. Could that be positive as a residual or as a result for pound sterling?
Well, I mean, we'll have to see, but I mean, I think the pound will gradually move to around about 125, 135 will be the kind of trading range, to be honest.
Well, let's shift gears and talk equities. We've seen a very strong run for European and U.S. equities. The Dow just hitting a fresh record yesterday. The Stock 600 is coming off of 5 positive weeks in a row. Do you think that there is enough to support further gains here for equity markets through the end of the year and the beginning of 2020?
Well, this time of year is normally a good time of year for stock markets. They tend to have a good performance in the close of calendar years, so it's hard to think there's going to be any different this year. But you do have this,
except for last year, we should say.
But you do have this unusual situation where the earnings have been downgraded and the ratings are going up, but then you've got the alternative asset of bonds where yields until recently have been very low. So it's a kind of equities still look undervalued compared to bonds, but they don't look particularly cheap on their own merits.
Well, Bayat says we're in the midst of a cyclical recovery here, and we're poised to see companies start spending more as the interest rates remain low and policy accommodative for longer here. You think that's too optimistic, too bullish of you?
Well, I mean, spending has been subdued for a long period of time, so no doubt there's a catch-up for many companies. I still think going forward, I think growth will be slow, earnings growth will be slow, and I think in terms of stock markets, I think some of the valuations, particularly in the US, I mean, look at Apple. I mean, Apple's added $400 billion of market cap this year, which is more than JP Morgan. And the valuation, despite the essentially a profits warning last year, is now on 2021 times earnings.
Well, we have no visibility in the iPhone units that are crossing, and as we see pressure around those sales. But what would you say to the valuation argument that we've got a lot now in the price of some of these stocks, in particular technology, semiconductors, for instance?
Not sure. I mean, the US has vastly outperformed all other markets, developing markets, Europe in particular this year. And then within the US market, which went up, of course, we have also dispersion there, and the leaders are, as you mentioned. But of course, there were good reasons for that, because there are margins, there's growth, there's opportunity in that sense. So I think the US will perform, but on a relative basis, I think developing markets with a weaker dollar, and then Europe, which is 50% lower in valuation and more export sensitive, will profit from a Goldilocks environment and from the year-end, beginning of the new year and new decade trade. And therefore, I think risk assets are on, and there's a lot of catch-up. And then what you said about bonds, absolutely true. I think the equity bond ratio has really bottomed out and is rebounding strongly right now, and there's a room to go because bonds have been very strong this year in that sense.
Thank you very much, Beat Allen. We'll pick up the conversation in just a minute. Meantime, more bad news coming through from the auto industry, this time from Nissan, and the company deciding today to lower its annual sales forecast from 11.3 trillion to 10.6 trillion yen. The company, which of course has been trying to recover from a scandal by the ousted chairman Carlos Ghosn, now reporting a 70.4% fall in operating profit in the second quarter. The company's profit underwhelming in this quarter as well. And what we've had, 30 billion yen posted from July to September. This is versus forecast for higher number of 47.5 almost billion yen. The numbers same time a year ago, 101.2 billion yen. So you can see the hit that the company has taken. And we are seeing, of course, the same issues facing this company versus others. The trade war that's been out and the deep investments required in self-driving, autonomous and electric cars. Juliana.
Let's take a look at Renault. Shares in the alliance partner of Nissan are trading lower following Nissan's outlook cut. Renault down 2.2%. And this is, of course, in contrast to the broader auto sector, which is getting quite a boost this morning from expectations on the trade front when it comes to President Trump's potential delay of those auto tariffs on European automakers. Let's take a look at Osram shares. Osram continues to push shareholders to support a $5 billion takeover offer from AMS. The German lighting company said the bid values the firm appropriately. The backing comes after Osram suffered a loss for the fiscal year, blaming a downturn in the autos industry. The company said it does not expect car production to recover in the short term, as it announced plans to cut costs and not pay a dividend. Osram shares up about 0.17% today, and AMS shares just a touch below the flat line, but no major moves for either of those names. Shares in Dialog Semiconductor, meanwhile, are higher after the chipmaker updated its long-term guidance. The company says it expects to see an improvement in its underlying operating and gross margins, boosted by continued savings. Dialog Semi shares up more than 5%, so quite a strong reaction for Dialog Semi this morning. Well, coming up on the show, Total CEO Patrick Pouyanné tells CNBC his investors want one thing and one thing only. Find out what it is after the break.
Right now on CNBC Make It. This self-employed millennial isn't afraid.
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Then it was time for glow-in-the-dark mini-golf. I got a hole-in-one. Well, 3. I'm a bit rusty, okay? There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Carry on, choose findandfundmycar.com.
It's another Tuesday morning. Yet another chilly day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
Total CEO Patrick Pouyanné says he is not at the whim of shareholders, only seeking higher returns as the French oil giant makes the transition towards cleaner energy. Speaking to Steve at the ADIPEC summit in Abu Dhabi, Pouyanné said investors in the energy space are increasingly asking for, quote, sustainable dividends over high yield. Dan joins us now from ADIPEC conference in Abu Dhabi. Dan, just talk us through one of the key conversations there around the future energy, because the transition seems very hard to execute. You've got protesters on the street and many environmental protesters who want the change to happen now. You've got investors chasing dividend yields, but also wary of being invested in a company that does not tick the ERG space. So just give us a sense of what these companies are going through.
Absolutely, Karen, and it's a very complex conversation that has been underway for a number of years now, really reaching fever pitch, you could contend, in 2019. We know that the global demand for energy is rising, and the entire energy industry is under significant pressure from climate activists and protesters who say that these companies are not moving fast enough to secure a low-carbon future. As you pointed out, we heard from the Total CEO, Patrick Pouyanné, in conversation with CNBC's Steve Sedgwick, who essentially said that major governments around the world are not going to abandon economic development and social development, human development, if it means moving away from traditional sources of energy. He also said that while he is chasing those sustainable dividends, as he puts it, unfortunately at this point, even though effort is being made in that transition, the world cannot run on renewable energy alone. Listen into some of his comments.
Today we don't have enough rational debate with all the consequences of what does it mean, a 1.5 to 2 degree world. I think again the ecologists are very consistent. They say it. They say we should find a way to limit the demographic growth of the world. They are consistent. But for leaders it's difficult. You know, even in Western countries, they want to answer to young people in the streets, and at the same time, when people are complaining about raising CO2 taxation on gasoline like in France, then they say, let's cancel the CO2 taxation, you know? So there's a problem, which is difficult, because again, we speak about energy, it's a fundamental need, and people, again, prefer the affordability of the energy than the cleanliness of it. And we can observe it in many parts of the world. So that's the big challenge. It's a huge challenge. And antagonism between these two parts. Of course, you can consider that it makes no sense to continue to produce energy. There is no planet, but today human beings, they want also to develop.
The Total CEO there making a very interesting comment, saying that the debate over this issue is no longer rational. Yes, he agrees that the world is hurting right now, but how we solve that challenge is one of the biggest problems of our time. Interestingly, he also said here that companies are making greater efforts in this transition, as he pointed out, but importantly, governments, as I said before, are not going to abandon traditional secure sources of power if it puts economic and human development at risk. Those comments were also echoed by the BP CEO, Bob Dudley, who was also speaking alongside the Total CEO here at the ADIPEC conference. Bob Dudley also made an interesting point, saying that the world is going to need an additional 30 to 40% capacity increase in energy if it is to take on some of the challenges of the future, and an additional 2 billion people on planet Earth by the year 2040. His view is that natural gas is going to play a bigger role in that overall energy transition story, because basically natural gas emits half of the carbon that traditional sources of energy do, like coal, for example, for the same amount of energy output or energy return. So he says that natural gas is going to play a bigger role in the future. However, he also agreed that renewable energy alone is not the primary solution at this point in the transition. So clearly companies under a lot of pressure here to do more to appease climate activists and concerns around the environment today. However, doing so while also appeasing their own shareholders, and doing so in a manner that enables a smooth and orderly rollout of some of these new technologies is a great challenge for them. But it is a challenge that they are confronting head on, guys. It's back over to you.
Dan, thank you very much. Around the set still Alan Miller, founding partner and chief investment officer at SCM Director, and Beat Wittmann, partner at Porter Advisors. Alan, you've sent us almost a whole page on greenwashing, taking a bat to ESG and effectively just summarising no rules or regulation around the calculation. Some funds misclassifying ethical investment focus, some funds investing in bad ESG stocks, so effectively tobacco, alcohol, gambling, and ethical scores varying enormously.
Yeah.
Just give us a sense of how you then view this energy transition by the oil majors and whether they should ever fit into an ESG category.
Well, I suppose that if you think about it, because ESG is 3 screens, you can have a low E score, but if you've got the right composition of your board or other constituents, then you can score high on the S and the G. So when we look at companies like Rio and BP, they don't actually score that badly on a lot of the ESG scores, and a lot of the ESG funds have quite large amounts of mining stocks, oil and gas, not to mention airlines, which I didn't think were particularly environmentally friendly. But beyond that, you've got kind of a lot of the data is open to abuse. Most of it's not audited. You've got funds where we found one portfolio where 95% was invested just in a plain vanilla government bond fund. So, I mean, if that's an ethical portfolio, I mean, that is absolutely astonishing. And the FCA says it's kind of looking at these things, but I mean, once again, I think the FCA is the equivalent of a traffic warden. If you know every time you park on a double yellow line, you won't get a ticket, it does tend to encourage you to park on a double yellow line.
Yeah.
Well, I think one issue is that you have the correct labeling on something. ESG is then defined by something, and then there has to be compliance. But of course, intellectually speaking, it's a wide topic. We would argue the US is leaving the climate accord, yes. So therefore US treasuries are in violation. So it depends a bit how you see things. But I think no doubt that in the real economy and in the asset management industry, that's a category to stay. That's clear, and to be developed. I think we would agree on that. But the question is exactly what you say. What is on the label and what is really in the bottle?
And also, I mean, we've seen evidence that there's various companies simply getting companies to essentially kind of work out how to get their green score up. And nothing has actually fundamentally changed. And there's companies that make a good living out of this. And if you think about the questionnaires that go from the big fund management companies, they have no way of knowing whether the answers are right or wrong. So I think the only answer is to give investors the whole portfolio, put it online, so that investors can see, here's the holdings, And am I happy with these holdings or not happy with these holdings?
Now, it feels like protesters and consumers, they're not fooled by what they're hearing from these companies. Yes, from a regulation standpoint, you make the case that there needs to be more uniformity when it comes to regulating what is actually behind the curtain in a lot of these portfolios. But do you think investors are underestimating the risk that we see a more sustained, severe backlash from consumers of these companies, and the companies are not actually doing enough, and investors in things like airlines and oil and gas and petrochemical companies perhaps aren't as aware of the risk as they should be?
Well, I think in a lot of these funds, that will be the next area that people will look at. And I think actually talking of risk, the investors in these products of fund management companies, they're taking it on trust that they've got ethical green portfolios. And essentially, a lot of those companies are abusing their trust by, if they can't find the right products, they shouldn't have a portfolio. They shouldn't simply say, well, actually, here's a way of earning higher fees, so we'll launch this green fund in a particular area where we can't actually find products to fulfill it. There'll be more and more products, more and more companies becoming more green. But if you don't have the available resources, the available ingredients for that fund, don't launch it.
Alan, thank you so much for joining us. Alan Miller, founding partner and chief investment officer at SCM Direct, and Beard staying with us. Coming up on the show, the head of Germany's biggest industry group has warned of two key risks facing the German economy. Find out what they are after the break.
It's another Tuesday morning, yet another chilly day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead with your ankle.
Search for QuickBooks, perfect for making tax digital. QuickBooks, backing you.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
To delay a decision on auto tariffs for another 6 months, but Renault shares hit the brakes, plunging to their lowest point in 6.5 years. after alliance partner Nissan lowers its outlook. Infineon posts a rise in fourth quarter profit despite warning of auto market weakness and a fraught macro environment, sending shares in the German chipmaker sharply higher. Dialog Semiconductor shares surge after the chipmaker updates its long-term guidance, boosted by continued savings. And shares in Deutsche Post jump as the courier company nearly triples its third quarter operating profit, fueled by continued growth in e-commerce and a jump in German postage prices. Into the European trading session, and we have given up some of the gains we saw come through earlier on. The Stock 600 now up just 4 basis points. When the market first opened, we were up more than 10 basis points. So a little bit of caution now coming through. Now, all eyes, of course, on President Trump, who is due to speak in New York and give an update on U.S. trade policy. And that uncertainty around the state of U.S.-China trade certainly weighing on sentiment to some degree. We are seeing some reaction in the auto space. We'll look at that when we dive into the sectors, to reports that President Trump could delay a decision on imposing auto tariffs on European auto imports yet again. So providing some support for automakers, but overall, some of that exuberance that came through in the early moments of trade has faded. Let's dive into the sectors and see where things stand at this point. We have got telecoms, technology, utilities at the top. So autos has actually fallen out of the top performing sectors this morning. You'll remember earlier on, just a half an hour ago, autos were right there toward the top of the Stock 600. So a little bit more of a caution coming through there. Of course, a little bit of an idiosyncratic story as well, with the Renault shares dropping on the back of a Nissan lowering its outlook. At the bottom of the board here, we've got retail down 0.4%, chemicals, household goods, and food and bev. That rounds out the bottom section of the Stock 600. Let's take a look at single stocks, because it's been a big morning for corporate earnings as well. Infineon shares are rallying more than 6% after they came through and posted a profit despite warning of a grim outlook for the auto sector. Dialog Semi shares up more than 6%. They upgraded their long-term guidance. Deutsche Post also delivered a very solid earnings report this morning. Those shares up 4%. One name to highlight at the bottom here, Lonza shares down nearly 5%. The CEO of Lonza has announced he's going to step down for personal reasons. So that's a look at the single stocks. The overall fairly muted session coming together now for European equities. Karen?
Juliana, thank you. The head of Germany's BDI has told CNBC in an exclusive interview that the ongoing trade war and Brexit are the biggest external risk to the German economy. Annette also asked Dieter Kempf if now is a good time for Germany to unleash fiscal stimulus.
We have honestly two things to consider. One, we have quite some room for investment. We have enormous taxes in Germany, and the finance minister has a lot of money to spend. Tax income from his point of view is still more than expected all the time. Just the last estimate was a bit lower than the estimate before. On the other hand, we are lacking huge investments. We have a huge scenery of possible investments, which could be a good basis to accelerate our economic growth. And that brought us to the opinion that it might be advisable to use that room, which is about 10 billion euros per annum, to use that room between what we call schwarze Null and what we have stated in our so-called Grundgesetz, which we do not want to touch. That will give us additional room for investments of about 10 billion euros a year.
Let's get out to Annette for more from Berlin. Annette, I thought the amusement at the start of that response is quite telling, that there are so many questions now. When are the Germans going to launch that fiscal stimulus? When is the timing? How much could it be? Is it going to happen at all?
Well, actually, I think if you talk about fiscal stimulus, we still need to wait until we might get a deterioration on the labor market here in Germany. Because, I mean, as we know, the finance ministry is sitting quite tight on its budget, and it's very highly unpopular also with the general public to make new debt, even though Germany doesn't have to pay anything for it. Having said that, I'm now joined by Ann-Christine Achleitner, who is a professor at the Technical University in Munich and also member of the board of Munich Re and Linde. Thank you very much for joining us.
Thank you for talking.
Yeah, let's switch topics completely now. We have a lot of shareholder activism currently in Germany and a lot of pressure on boards. So you as a member of a board, but also as someone who's around for quite some time, how would you characterize that time currently?
I would think that shareholder activism only yet to come if we look at it from an American's perspective. But the thing that really strikes me as interesting is the whole purpose debate that you have in the United States and the question how American investors are going to act in Europe, specifically Germany, because we are home to the stakeholder idea. So I hope that it's going to be seen that we have navigated a bit differently with other companies in the past.
Having said that, do you think that there is room also for like shaking up whole industry by certain shareholders, the likes of Cerberus, but also others, in order to kind of diminish the size of the European industry?
The point is that the international investors have a huge chunk in the stock holding of the big German companies. If you look at the DAX, and obviously this has an influence, you don't have to be a shareholder, you don't have to be an activist, to kind of have partly different opinions, because you have a different background, you have a different system, and that does have an influence. And that's why I would wish Germans to invest more into stock, also for financial reasons.
So if you say shareholder activism is yet to come, what are you expecting in the coming years?
Exactly as I said, you just have to look to the United States to see what's coming. You've seen this pattern in a lot of situations. We've seen it in private equity, for example. That the companies were first very active in the United States, and then at some point they came over and applied the same instruments and the same ideas. We see it in venture capital right now. This is an absolute standard development. Mm-hmm.
Talking about venture capital, but it's also the question of where do we get all the financing from? Because in a way, Europe as an island is kind of an island. And if the American investors are going away, there's not a lot of enough cash around, right?
It's an interesting thing. You would see all of Europe as an island, but yes, international investment is very important in the European innovation system. It's mostly American money that's flooding in even more, but there's also Chinese money to come. So it will be a strategic question. For example, moving forward, first do you decide on the American, on the Chinese side, and the second one is, do we get our act together to provide more European and German innovation money?
And given all these geopolitical risks nowadays, the trade war between US and China, but also sometimes it seems that Europe has to make its mind up where it does want to do business with. Is that also a problem in terms of intellectual property in your view?
I think in general, you're absolutely right. We have to make our mind up, and I hope we take the momentum we have now of a new European Commission. I mean, independent from the fact that Frau von der Leyen is German, I think as such we have a new Commission, and we have to do this, and we also have to see the signs that Brexit provided, to do this. I don't think, yes, you can do something on IP, but I think that is not the major question. The major question is a very positive momentum moving forward.
Would you be in favor of such an industry strategy for Europe? Because Peter Altmaier, I think, once launched that as a strategy.
I'm very much, in fact, for the fact to see that we need some joint ideas here to build up industries. That first of all, that we have certain crucial industries so that we are autonomous, and the second thing is that we have an innovation strategy for all of Europe, not only for Germany. Yes.
You're an expert in innovation, so how do you think are we positioned in Europe versus the United States? Because clearly they have a lot of seed financing, etc.
We also have quite a lot of seed financing that really developed very positively. I think we are set up in a way. We have the big industries here that we're building in the B2B arena, digitalization of industries, and we really have to get our act together that we have enough capital for the companies to grow. We can actually now start them, but we need growth capital so that we can IPO them, that they can stay here, because we see that foreign capital also has the effect that companies do go abroad an IPO abroad.
Let's focus one more time on Germany as a broader macroeconomic picture. Do you think Germany is at risk of falling behind when it comes to these topics like digitalization, artificial intelligence, etc.?
Obviously, we have to struggle, and there are different reasons. Now, we had a very positive situation the last years, which is a bit of a problem also for Mittelstand, because if you have to digitalize all this and you're very busy with all the orders you have, that is a challenge. The extra thing now, if it comes to artificial intelligence, for example, you have to invest heavily, you have to have the people, etc. And yes, we should invest more. This is a totally new arena, and I think this will be a big struggle that we have to work on.
Thank you very much for your time. Thank you. Okay, guys, with that, I'm sending it back to you. I'll bring you a little bit more in roughly 20 minutes' time from here.
Terrific. Go and grab a coffee in the meantime, Annetta. Thank you very much. The ECB's Courier is speaking this morning, and he said effectively the Governing Council is committed to continuing net purchases. Also mentioned that there has been a lot of movement by banks rushing to cash in on the ECB's tiered rate system for deposits and excess liquidity already been traded across borders has been the message. But let me come back to you as you watch some of the European banks. I believe one of the more appealing areas for you in the marketplace at this point. What do you expect from the ECB? We've got a new boss in charge, Christine Lagarde, already pressured to have voting at the Governing Council in future decisions. And we've still got a system where many are questioning whether there's any effectiveness in monetary policy these days. So what happens next, and what does that mean for asset classes?
Well, let's start with the asset classes and economic growth. The ECB, like the Fed, will accommodate economic growth no matter what. And people who think that tools are, kind at the end of their effectiveness, they're wrong, because central banks, by definition, never run out of ammunition. But it might be, the toolbox might be expanded and extended, of course, and that will happen. So that Christine Lagarde starts with a kind of team approach that's politically smart and sensible, and she has certainly a lot of experience in that. So, and that's an approximation to how central banks work in terms of governance and transparency. So I have, that's not a topic. The ECB is there, well established, credible, and will function. There's no doubt about that. Now, the topic into the next decade, of course, is that we have ultra low and negative rates, and the credit spectrum of corporate bonds have also significantly moved down in the spectrum. And a next recession will pose more challenges. I don't expect that at any time soon, but it will happen, of course. And then fiscal policy will play a more important role, and increase investment, capex, to increase the productive potential into the US economy, European economy, and in G7 at large, is certainly overdue. Even in the US, nothing has happened on the infrastructure side. And Europe has the same issue. We just talked about digitalization of industries. So that's the challenge. But that central banks would go way out of their traditional remit. That will happen in steps, very slowly, and rightly so. The problem is, since the global financial crisis, that the central banks had to do the heavy lifting because politicians with fiscal policy, investments, and all that failed, basically. And that has to change, and I'm convinced that will change, slowly but steadily.
Slowly but steadily. But is it going to take a severe crisis to actually see that change, to see coordinated fiscal policy from Europe? Or is it something that you think they're going to be moved to consider now? I mean, President Macron has been making a lot of noise in the last several weeks about the need for more action from Europe. He did an interview with The Economist last week, and he was really stark in his message that if we don't wake up in Europe, there's a considerable risk that in the long term, they're going to disappear geopolitically. So, I mean, what is it going to take to get Europe to act in a more concerted way?
No, I would sign up to 75% of what Macron said about Europe. Europe has a reform challenge here. I think typically 1/3 of the reforms happen as you go. And typically you need a crisis to have really structural reform. That's just the reality. The idea that you repair the roof while the sun is shining is wishful thinking typically. But I think we will see some reforms, and key for Europe, I think, is completing capital market and banking union, and some steps, at least the German finance minister has opened the discussion at least. That's a first good step, but a lot remains to be done. That would really help an awful lot.
Just looking at a comment from Alan Higgins on Twitter this morning, one of our guest hosts on the program, and he was talking about the amount of margin in the banking system at this point, very low levels, because you've got negative deposits at this point. So it means that some of the banks are left with a margin, 0.82%. Need to set aside capital, therefore very low return on equity for assets. What does this mean as we wait for leadership to take place on banking union? Doesn't it mean that we've still got very depressed rates of return across European banks, and it might be too early to be investing?
I would not invest in European banks. They are really value traps, unfortunately. We need banking union. There's huge overcapacity in banking in Europe. Typically, you have countries with 3 layers of banks. So you see the best example is German retail banking. If we don't see really some more political will to go across Europe, not only insurance deposit, but really creating a bond market and national consolidation of banking systems, and then cross-border deals. Then of course I would not invest. And the banks, of course, they face margin pressure from low rates, but they have not even really seriously started to change their strategies or their business models, and they have significant cost-cutting potential. They have not digitalized in their core business, and they've been stacking technology above technology for decades, really, and many of them are in that respect beyond repair. So there's significant cost-cutting.
Damning indictment, isn't it? Fascinating when you think about all the data that they have. They haven't gone down the road of full digitization. Thank you, Beat. I want to just bring in some numbers from Kantar today, and these numbers are always fascinating about the trends in the UK grocery market. Probably not a surprise to you that the likes of Ocado, Lidl, Aldi are growing their market share yet again. All the majors, the likes of Tesco, Sainsbury's, and in particular, W. Morrison was the hardest hit. It was the laggard, losing ground to the UK supermarkets, its rivals. So just going through these numbers quickly, Ocado market share up 1 to 1.4%, Waitrose market share falling to 5%, Morrison's falling to 10%, Aldi Lidl joint market share rising to 13.9%, Sainsbury falling to 15.6%, Asda falling, don't forget these were the two that were looking for a tie-up, Tesco's also falling to 27%.
Just to link this back to the discussion with the Land Securities CFO earlier, and Karen, you raised a really important point about their reliance on some major high street brands for their real estate. And this is, again, an instance where we're seeing this massive structural shift to these online retailers, and it's at the expense of brick and mortar. But I think he made the interesting point around timing. Yes, right now brick and mortar is suffering, and we're seeing it in grocers and across retail, but that's because they're having to invest so heavily to get it right. But it doesn't necessarily mean the experience of brick and mortar is necessarily gone forever.
And in the moment, you've got a race to the bottom on prices, don't you? When you go into the stores, everybody wants to have the cheapest product, and then you've got price matching going on, which means that those margins for many of the supermarkets have been absolutely hit when you've got still a fairly murky consumer environment as people weigh up Brexit, election, job security, all of these issues.
And then you look at the amount of retail sales, which is digital globally, it's still below 10%. I mean, this is an advanced industry. The technology was in place in the year 2000 already, and it started to happen 10 years later, and we are far away from having all digital. And that's a leading industry. Then look at all the other industries. So I think technological transformation, is just at the beginning of it.
It's funny, people still want to go into grocery stores to do their food shopping. I think it's amazing when you look at the percentage. It's still a very low percentage of the overall sales that is food at this point. And you've seen elsewhere in general merchandise and the Amazon story, the shift to general merchandise has been enormous. I mean, do you do your food shopping in store or do you do it online?
Yeah, I do it in store, and I think this because my basket size is probably not big enough to justify doing it online for me.
You need to spend £40.
Yeah, I'm only gonna. Yeah, I mean, when you're not shopping for huge numbers of people, and I think this has been a struggle for the grocers to get it right and to justify moving to online. Can they get the basket size big enough to make it worth their while? And I know M&S struggled with that for a while, given that the bulk of their customers were buying baskets that weren't big enough.
How do you conquer that challenge? That's a bit of a millennial challenge, isn't it?
Yeah, and it comes down to urban living. I mean, I'm sure there are differences. I don't have the data at hand, but differences in terms of the take-up of online ordering in urban locations versus suburban locations. But obviously, one of the attempts to deal with this has been attempts to consolidate, and we saw Sainsbury's and Asda.
It's just not been allowed.
It's just not been allowed.
And that's incredible, though, when you talk about a fairly consolidated industry. What's their strategy next? And going overseas, obviously, many had tried, and that was not a success.
Yeah.
And one of the options now, I think, has been to obviously try and push some of those cost savings through the online delivery digital business. We're going to park the conversation there and just push on. And we've been waiting for developments on the ground in France as the French President Emmanuel Macron is due to speak at the Paris Peace Forum, where he is hosting some 30 heads of state or government, as well as business leaders. Let's get out to Charlotte for more. She's live from Paris for us. Charlotte, just tell us what we can expect from this forum today and the sort of leadership Emmanuel Macron is trying to achieve on this front.
Good morning, Karen. Yes, we are here at the Paris Peace Forum here. The opening ceremony just started just behind me, and you see a lot of journalists here gathering on the media balcony to try to catch a glimpse of the action here. This is the second edition of this forum. The first edition was last year in the wake of the first centenary of the end of the First World War. This is the second edition, and today we expect about 30 leaders to attend. Most of them coming, about half of them coming from African countries, but also NGOs and companies all gathering together. And one of the core topics here will be defending multilateralism. Of course, we've seen this topic coming back in the wake of more nationalism and protectionism growing in the world in the past few years. And Mr. Macron wants to put this topic back at the heart of the conversation here. Here attending the opening ceremony, interestingly, is the Chinese vice president here attending, which is interesting. China coming in defense of multilateralism, while there is no U.S. representation this year at the forum. And of course, this forum comes in the wake of those comments from President Macron in this Economist interview on NATO being brain dead. And of course, this caused a whole series of criticism coming on these terms. Of course, President Macron was talking about how Europe needs to stay on its own, and in a world where the US seems to be disengaging, and how Europe needs to stand on its own and have its own autonomy and not be caught just in between China and the US and be a collateral victim of this dimension. But of course, this expression, brain dead, caused all sort of criticism. Angela Merkel said these words were too drastic. And it will be interesting today, one of the sessions is with the German Foreign Minister, Mr. Maas, who was very critical of this term from President Macron, NATO, with the French Foreign Minister as well here, talking about defending multilateralism. So again, a lot of interesting talks here. We'll watch about a new comment on NATO, maybe from President Macron, that he tries to correct. You could say, in a way, it's one of these, again, exercises from President Macron on identifying a problem, but struggling to get people on board, maybe to come up with a solution, being a bit brash in his expression. So we'll see if today there's maybe a little bit of damage control here from President Macron.
Thank you very much. We'll be listening out for the messages that you can extract for us as we look at von der Leyen taking the stage right now and stepping into that key position. But I want to get you back into the conversation because you make the point that geopolitical risks are a structural issue. So all the protests we're seeing in various different places, you think is effectively a structural issue. Just talk us through the way geopolitics, in your view, gets solved, or maybe it doesn't at this point.
Well, it creates, of course, news and noise and pictures of riots. There's an underlying issue, which is, of course, non-inclusion, inequality in wealth, in incomes, mostly also lack of opportunities. or a level playing field of opportunities.
How does this get tackled? When you talk about income inequality, a lot of it is captured by corporates and also potentially business people, innovators, not paying the same rate of tax as people who are on the traditional tax band.
That's absolutely part of that. And the OECD is now pushing an overhaul of the global corporate tax regime. That's something which is overdue after decades of the old regime. And that's a trend which will not stop, and that's important that it's going to happen in an appropriate way. But I think there's a lot of ideology against in this discussion, but I think it's more about creating real competition.
Beat, thank you so much for being our guest host today. Beat Whitman, partner of Porter Advisors. We're going to come back with more coverage from that Peace Forum from Paris right after this on Street Signs. That's all for Squawk Box from Juliana and myself. Have a good day.
The CNBC app has new features just for you.
It's another Tuesday morning, yet another chilly day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Welcome to Street Signs. I'm Shimona Versace, and these are your headlines. President Trump is expected to delay a decision on auto tariffs for another 6 months, but Renault shares hit the brakes, plunging to their lowest point in 6.5 years after alliance partner Nissan lowers its outlook.
Analog Semiconductor shares surge after the company updates its long-term guidance, while shares in Infineon follow suit, even as the German chipmaker warns of auto market weakness and a fraught macro environment. Shares in Deutsche Post jump as the courier company nearly tripled its third-quarter operating profit, fueled by continued growth in e-commerce and a rise in German postage prices. And dialing up, Vodafone shares jump after the company returns to growth in the second quarter and raises its guidance, while a 1.4 billion euro share buyback supercharges Iliad to the top of Europe. Well, our top story today is all about autos. President Trump is expected to delay plans to slap tariffs on imported EU vehicles for another 6 months. This according to multiple media reports. The Trump administration has until Wednesday to decide whether to impose the duties, which were previously delayed in May. The White House declined to comment on the reports to CNBC, but the news had lifted European auto stocks in pre-market trade. However, Renault has driven the sector lower. Shares in the French automaker have hit the lowest level in more than 6 years after its alliance partner Nissan cut its top and bottom line outlook. The Japanese car giant has lowered its sales guidance for all of its key markets, namely China, North America, Japan, and Europe, and slashed its profit forecast. This after posting a 70% drop in second quarter earnings, and the group has been hit by lower demand, uncertainty over its future leadership following the ousting of Carlos Ghosn, and of course the stronger yen. Meanwhile, Infineon says it's feeling the weakness in the auto market, cautioning that it does not expect an improvement in the all-important sector anytime soon. The German chipmaker has lowered its full-year guidance, saying the economic environment is, quote, fraught with uncertainty. This despite posting earnings in line with expectations, which has helped send the stock sharply higher in early trade. And Continental gave a gloomy outlook for the global auto industry, saying it expects passenger car production to remain stable at best into next year. The German car parts maker, which warned last week that third quarter earnings would be hit by a slowdown in the sector, also posted a 20% drop in adjusted operating profit during the period. So plenty of news for the auto sector this morning. I want to bring in Arndt Ellinghorst, the head of global automotive research at Evercore ISI. Arndt, as ever, it's great to have you with us. I just want to start with the macro news that the White House is considering delaying the imposition of auto tariffs by 6 months. You and I have previously discussed the impact that could have on the auto industry in the past. You've been very negative about its potential impact, but by postponing it only by 6 months, it's not completely out of the woods, isn't it? And it doesn't remove the uncertainty fully for the sector.
No, it doesn't remove it fully, but I think it's become increasingly clear over the last couple of weeks that the interest, within the entire administration in the U.S. To go to war on trade with Europe, and in particular with Germany in this case, is very limited, and it's a very different situation to, the trade battle that's going on with China, which many Americans do actually support. So I think, on the European side, I personally wouldn't expect 25% tariffs on car exports to the U.S., but Trump will certainly keep it in play in order to get some other trade concessions from the European.
And indeed, the auto sector as a whole is searching for direction today because you have the macro story combined with the micro story. I'll ask you about some of those micro stories shortly. But in terms of the macro risk premium, how much risk actually do you think was baked into the auto sector going into this potential tariff deadline?
Oh, a lot. We see many car stocks that have derated by 30 to 40%. Against their own history, that have derated by more than 40% relative to, for instance, the German DAX, if you look at a BMW. So if these macro concerns continue to ease, which I would expect, certainly the picture for car names, especially OEMs, is a bit brighter, and we can see the valuation multiple moving higher.
And Arndt, let's talk about some of the commentary we've had from various companies and auto supply chains. We heard from Infineon today saying that they do not expect an improvement in the auto sector anytime soon. Continental as well gave a gloomy outlook for the auto industry, saying that it expects car production to remain stable at best
for next year. What do you make of all of these sounds coming out of the companies that to do with auto supply chains going into next year?
Yeah, there are two major things going on. Firstly, we're now entering a phase, maybe multi-year phase, of very limited growth. We've seen nice growth in the US, in Europe, even in China over the last 3 to 5 years. And from a cyclical perspective, we're entering a period of headwinds in coming years, and that's the cycle, and on top of it, it's transformation.
Right, two very important points. Let's talk about specific companies, because we've got Renault today falling to its lowest level since 2013, I believe, on back of the weaker earnings out of Nissan. In fact, Nissan had posted a 70% drop in operating profit. The last time we spoke actually was on the day of the Renault earnings. How much of the declines we're seeing in operating profit for both Renault and Nissan are a function of just the utter turnover at the top, questions about Carlos Ghosn, his legacy, changes in management, and how much of it do you think is to do with just the general macro environment?
Yeah, Jemana, you make a really, really good point. I would say almost 100% of the problems that we're currently seeing at both Renault and Nissan are homemade, and they're a function of the lack of leadership, the lack of focus on the operational part of the business in probably the most important time for the industry. Because we see other companies, other peers, if you take Peugeot operating at an 8 to 10% industry-leading profitability. You look at Toyota, right? They just printed, more than 8.5% operating margin. You look at Volkswagen, they delivered 10.4 billion in free cash flow after 9 months this year. So companies that have their eye on the ball, that operate, that focus, do really well, and others that don't face huge risks. And that's what it's all about. It's leadership and focus, and that's really what needs to be fixed at both Nissan and Renault.
Right, very clear, and we're seeing that in both of their earnings. Arndt, I'm going to leave it there. Thank you very much for taking the time to speak with us. That was Arndt Ellinghorst from Evercore ISI. Now, moving to other company earnings, Uniper has raised its full-year outlook on the heels of the British government's decision last month to revive its capacity market. The German utility company now expects full-year EBIT of up to 950 million euros and could also increase its dividend proposal. Let's get out to Sascha Bibert, the CFO of Uniper, who joins us down the line. So, sir, the language that's coming out of you today is remarkably different to some of the outlook and the commentary we had in the second quarter. Can you give us a little bit more context as to why your outlook is so positive?
Yes, good morning, and thanks for having me. I think we need to differentiate a little bit. When we look at our actual numbers, 9 months, they're still down, and the story is very much unchanged. But what is indeed positive, and that is why we went ad hoc yesterday evening with that upgrade in outlook, is now the full year. And we are indeed very bullish on the fourth quarter, with one of the key factors you mentioned already being the reinstatement of the UK capacity market. But also our operating business is performing nicely, so we're looking for, as you said, up to 950 million in EBIT.
Right, and last quarter you mentioned you had a negative hit from the price risk of carbon prices. How do you see that evolving in Europe over the coming quarters, especially with these stricter emission standards going forwards?
Yeah, the carbon within our results is somewhat of a technical factor that comes both from the purchase of activities that we need for our operations, as well as our corresponding hedging activity. And specifically for the fourth quarter, I would now expect an EBIT contribution to the tune of plus 200 million. So that will turn into a positive one.
Sir, and perhaps a more long-term question. I mean, at the end of the day, you are still Germany's second largest coal producer. Are you feeling the pressure to transform your company to be more in line with the times? And certainly, the world is moving towards sustainable energy, cleaner energy, moving away from coal. What does that mean for a company like yours, for the long-term challenges?
Yeah, I would absolutely agree with you. I wouldn't even call it a pressure, but I think it is a strong desire also from our side to move forward. And we all see what the societal and political will is, and we're fully embracing that. So Germany has decided to exit nuclear, and that is respected. Currently, the coal exit discussion is ongoing, and there will be the day when there is no further coal, which I think just makes one of the many questions even more prominent, and that is, how do we then secure security of supply? And in that respect, I think Uniper is excellently positioned with all of our gas activities. So that makes us actually more optimistic than you may think regarding the years to come.
Right, certainly something to watch out for from the investment community. I want to ask you about your relationship with your largest stakeholder, and that is Fortum. They have an almost 50% stake in your company. They're in the process of trying to up that to 70%, but they've said that you've obstructed the process. Where do things stand now with Fortum?
Yeah, Fortum is an important shareholder today, and that will also be the case tomorrow. We all read their announcement with the intention of increasing the shares further by a minimum of 20.5%, subject to regulatory clearance both in the US as well as Russia. And I can assure you one thing, we don't see shareholders as a problem. Yeah, they are an enabler for our company strategy, and therefore you shouldn't expect us to interfere in any kind of bilateral or trilateral discussions or transactions that are going on with any of our shareholders. So we take a constructive stance. We have good discussions with them, and we'll do the same going forward.
But how likely is it that we actually get management support for a takeover offer from Fortum? I mean, are there any specific issues that you would like to be addressed?
Yeah, that's a very hypothetical question, because that takeover offer which you refer to is simply not on the table. What Fortum has announced is a bilateral or trilateral transaction with Elliott and Knight Vinke subject to regulatory clearance. So on those bilateral or trilateral transactions, there's simply no management view needed. As I said, we don't interfere in those transactions. If there ever is a takeover offer for the benefit of all shareholders, then we will surely form a view. But now making up a generic request list, I think, would be too far-fetched.
Understood. Sascha Bibert, the CFO of Uniper, thank you very much for taking the time to speak to us on Street Science today. Now, other company earnings. Deutsche Post DHL has posted better than expected third quarter operating profit. The company credited the boost to solid e-commerce performance and growth at its freight division, despite lingering concerns over global trade. The German firm also backed its profit guidance for 2019, added it expects a, quote, traditionally strong holiday season. Vodafone raised its full-year earnings guidance, citing an improved performance in previously difficult markets, Spain and Italy. The world's second largest mobile operator returned to growth in the first half, as it also saw a positive impact from the integration of Liberty Global's German cable networks business, which it purchased for 19 billion euros earlier this year. And Iliad shares have jumped by almost 20%. The move comes a day after the French telecom giant announced a 1.4 billion euro share buyback program at a price of 120 euros per share. That represents a 26% premium on Monday's closing price. Around 20% of the company's share capital will be affected by the program, which will be funded by a capital increase guaranteed by the company's founder and majority owner, Xavier Niel. Stock is up almost 20% today in trading. And switching to the tech sector, shares in Dialog Semiconductor are higher after the chipmaker updated its long-term guidance. The company says it expects to see an improvement in its underlying operating and gross margins, boosted by continued savings. And stay with us. We're going to go for a quick break. But coming up, Total CEO Patrick Pouyanné tells CNBC his investors want one thing and one thing only. Find out what that is after the break.
Robinhood believes now is the time to do money. Without the commission fees and account minimums.
It's another Tuesday morning. Yet another chilly day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Watford, it's frosty outside, and you're staying in with your feet up, and they can stay up. Because with Hive Active Heating, you can set the perfect temperature without even lifting a finger.
Alexa, ask Hive to boost my heating.
And by never having to heat an empty home, you could save up to £120 a year on your heating bill.
Alexa, play my Nice and Toasty playlist.
Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in-store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
At Ring, we've reinvented the doorbell. So no matter where you are or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Welcome back to Street Signs. Well, let's check in on how markets are faring this morning. Looking for direction initially, but you can see that now almost all of the four majors are actually trading up in the green. It is a positive start to trading. The handover from Asian markets was also quite positive as well. Renewed optimism yet again about those phase one trade deal talks between the US and China. And then also some commentary out of the White House suggesting that President Trump may be looking to extend that auto tariff decision by another 6 months, giving somewhat of a boost to the auto sectors we were discussing earlier on in the show. But this is the picture. FTSE 100 in the UK up about 0.3 percentage points. And here we're seeing a bit of a lift on back of the political developments. The Brexit Party have decided not to contest 317 Tory seats. Some analysts are saying that that could lead to a higher probability of an absolute majority for the Conservative Party, being taken quite well by the FTSE 100 this morning, up about 0.3 percentage points. Xetra DAX in Germany up about 0.25 percentage point. I said autos are in focus. Also some of the tech names as well, the chip makers, Dialog Semicon doing very well. Deutsche Post also right at the top of the Xetra DAX. CAC 40 up about 0.1 percentage point, dragged down a little bit by Renault. We were talking about that earlier. Very weak results out of Nissan. Renault also down about 2.5 percentage points today, so that's dragging on the French index. And then the FTSE MIB in Italy up about 0.3 percentage point. But I want to take you to European fixed income because we continue to see a sell-off there, and that momentum is continuing this morning. We've got the 10-year Bund trading at around minus 23 basis points. We've sold off about 10 basis points in the last week alone. Again, taking its cue from what's been happening in U.S. fixed income. 10-year Treasury notes there about 10 basis points, 15 basis points higher actually on a 7-day basis. 10-year gilts in the UK up at 82. And remember, the UK, we're not just focused on the general fixed income moves, but also on spending plans. Both Tories and Labour, the Labour Party, have pledged to loosen the spending a little bit over coming years. So that's obviously being priced into fixed income markets. And then 10-year Italian yields up at 136. 10-year Spain not doing much actually today, but you can see the move in general is one of weakness for fixed income. But let's talk about the oil market. Total CEO Patrick Pouyanné says he is not at the whim of shareholders, only seeking higher returns, as the French oil giant makes the transition towards cleaner energy. Now, speaking to Steve at the ADIPEC Summit in Abu Dhabi, Pouyanné said investors in the energy space are increasingly asking for, quote, sustainable dividends over higher yields. So Steve joins us live from the ADIPEC conference in Abu Dhabi. And actually, Steve, I was just talking about the fixed income environment in Europe. You know, you still got 10-year bonds at minus 25 basis points. No wonder investors are still looking for those higher dividend yields out of the energy companies.
Yeah, you're right, Jemana, but when you look at those dividend yields compared with the rest of the equity market, they already trade at a significant premium. So people are asking for a lot more from energy companies. In fact, I was reading one analyst piece just a couple of days ago saying it's the sector that refuses to re-rate. No matter what Patrick Pouyanné and his peers, such as Ben van Beurden, Bob Dudley, Claudia Descalzi, some of the top players in Europe have done with their companies, they are still seeing share prices which are trading at a significant historical discount to where they have been over the last 5 or 10 years. And that is because, of course, there is a growing concern about investing from certain quarters, and only certain quarters, I hasten to add, in hydrocarbons. But, of course, a lot of these originally IOCs, oil companies, then turn themselves to oil and gas, then gas and oil, now looking at themselves as energy companies. So the point, and I had a brilliant conversation, I have to say I really enjoyed it with Patrick Pouyanné last night. I'm going to, in fact, so much so, I'm going to turn it into an in-conversation. So we have a good 25-minute conversation with Patrick Pouyanné about just being honest about what's going on, i.e. what do we want from energy companies? Do we want dividends, or do we want extra investment in renewables? Do we want these companies to service climate change and actually have cheaper, more reliable, less emitting fuels, or do we want them actually to promote economic growth? Do we want more oil and gas growth at all, or actually do we need to switch much quicker to those renewables? So lots of questions and lots of debate about what people, including shareholders, stakeholders in society, governments actually want, and he wants to see an honest debate. Listen in.
Today we don't have enough rational debate with all the consequences of what does it mean, a 1.5 to 2 degree world. I think again the ecologists are very consistent. They say it. They say we should find a way to limit the demographic growth of the world. They are consistent. But for leaders, it's difficult. You know, even in Western countries, they want to answer to young people in the streets, and at the same time, when people are complaining about raising CO2 taxation on gasoline, like in France, then they say, let's cancel the CO2 taxation, you know? So there's a problem, which is difficult, because again, we speak about energy, it's a fundamental needs, and people, again, prefer the affordability of the energy than the cleanliness of it. And we can observe it in many parts of the world. So that's the big challenge. It's a huge challenge. And antagonism between these two parts. Of course, you can consider that it makes no sense to continue to produce energy. There is no planet, but today human beings, they want also to develop.
I mean, the contradictions that Patrick Pouyanné is referring to are abundant left, right and centre. There are people in the world who just want to be able to heat their homes, who just want some form of transportation so they don't have to walk 8 miles to work and back again every single day. There are people in the world who just want to be able to feed their family, and that is what energy can provide for them. There are people in the world as well, equally with validity, who want climate change to be abated. They want actually energy companies to do more about it, and it's a question of juggling these two. I mean, look at France, for instance, and Patrick Pouyanné made this point both in panel and in interview yesterday, that on one hand, you've got the Gilets jaunes. They do not want price increases in their energy, in their fuel costs, what have you. But on the other hand, you've got climate change protesters in France and Paris and beyond as well, who want to see firm government action and action from the likes of Total. So how do you marry these things up? And then, of course, that takes us right back to Total and shareholders as well, who are saying, yes, we want increased returns for holding hydrocarbon or traditional hydrocarbon players, but at the same time, we want you to fund renewable development. These are contradictions, and I think what Patrick Pouyanné is making the point, I think very forcefully, is saying is let's have an honest debate about what's achievable. Can we achieve the levels of economic growth we want to see globally and see the abating of climate increases as well? And I think the answer maybe we can't have everything that we want, and we have to prioritise certain things at certain times of our development. Back to you.
certainly this isn't going to be the last time we're going to be talking about the energy transition, Steve. It's right at the beginning. And as Bob Dudley also said to you yesterday on your panel, the market has been a little bit too negative on the potential of gas as well. I was just speaking to the CFO of Uniper, which is Germany's second largest coal maker, and they're quite optimistic about the potential gas will have in the future when it comes to the cleaner energy outlook and the transition that many of these companies will have to make in the near term. Steve, thank you for your coverage from ADIPEC. Looking forward to chatting up and catching up with him a little bit later as well. Now stay with us because the head of Germany's biggest industry group has warned of two key risks facing the German economy. Find out what they are in just a few moments.
A moth without hope struggles in the spider's web.
This is the sound of Helen and Peter, hiking to the fairy tale fortress high above the winter wonderland below. Or it would be, if they hadn't stopped at the first beer house they came to. There it is, Helen and Peter. There's your Incredible. Fly from London Gatwick to Salzburg from £29 each way. With British Airways, Incredible is within reach. Terms and conditions apply. Limited availability and dates. Fare quoted is each way based on a return. cba.com/Gatwick for details.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Hi, Susan. What's a Brew City Brew Bite?
It's Beer Munch.
Oh, all right. But what exactly is it?
It's Beer Munch.
Okay. But what about a Brew City Halloumi Fry?
It's Beer Munch.
And an onion straw?
It's Beer Munch.
Yeah, it's Beer Munch. Yeah, so you keep saying. Hot, shareable snacks. They're delicious with a cold beer and friends. You'll find them in the freezer aisle. Brew City.
It's Beer Munch.
Some people find love par chance. Me, I found love in my Citroën dealership. I looked at new Citroën C5 Aircross SUV with advanced comfort seats, and boom! They say, Emmanuel, you also get 0% finance over 48 months. I say, I love it. Visit your local Citroën dealership and find love too. New Citroën C5 Aircross SUV, the most comfortable SUV.
Citroën UK Limited is a credit broker, not a lender. Conditional sale. Terms, eligibility criteria and return conditions apply. A guarantee may be required. PSA Finance UK Limited.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
Welcome to Street Signs. I'm Jemana Bersace, and these are your headlines. President Trump is expected to delay a decision on auto tariffs for another 6 months, but Renault shares hit the brakes, plunging to their lowest point in 6.5 years after alliance partner Nissan lowers its outlook. Dialog Semiconductor shares surge after the company updates its long-term guidance, while shares in Infineon follow suit, even as the German chipmaker warns of auto market weakness and a fraught macro environment. Shares in Deutsche Post jump as the courier company nearly triples its third quarter operating profit, fueled by continued growth in e-commerce and a rise in German postage prices. And incoming European Commission President Ursula von der Leyen addresses President Macron at the Paris Peace Forum and pledges to spend more on external action to be truly geopolitical. We bring you exclusive interviews with the CEOs of Danone and Sodexo from the event coming up. All right, it is 9:30, usually the time when UK data comes out. So we're just getting some of the employment data out of the UK today. So let me just bring that to you. Let's start with the earnings, actually. Average weekly earnings have come in at 3.6% year-on-year in the 3 months to September. That is below the estimate of 3.8%, but September alone was 3.6%. Ex bonuses, it's also coming in at 3.6% in the 3 months to September. So that is as far as the earnings are concerned. In terms of real terms, so if you remove inflation from that, the real weekly earnings are coming in at 1.8% in the 3 months to September. In terms of UK job vacancies, they're at 800,000 in the 3 months to October versus 814,000. That is the biggest year-on-year fall since December 2009. So the job vacancies are dwindling, sign of a tight labor market, which is something that, of course, we have talked about quite a lot on the show, and also with the backdrop of the UK economy. Wage growth continues to be quite strong. And as I just mentioned, wage growth here is coming in at about 3.6%. So actually a bit lower than the market expectations of 3.8%. So you've seen the pound drop just a fraction on that news, slightly lower than expectation wage growth. But again, the wage backdrop in the UK continues to be one of strength. Now, let's turn your attention to some live pictures of French President Emmanuel Macron. He is speaking at the Paris Peace Forum, where he is hosting some 30 heads of states or government, as well as business leaders. Charlotte joins us live from Paris. And Charlotte, this is coming on the heels of quite a controversial interview that President Macron gave to The Economist just a couple of days ago. But he also said that Europe is standing on the edge of a precipice and needs to get its act together and propel itself forwards to the future, particularly when it comes to defense and geopolitical considerations. Is that one of the major themes of this peace forum?
Actually, it's the classic view of a General de Gaulle that here President Macron is adopting and making his own, of Europe having to stand on their own and not be caught in between other power struggle. And here, of course, it's about China and the US, and Europe cannot afford to just be a collateral victim of this struggle. And yes, these comments meant some waves over the weekend, and surely today President Macron will try to clarify the air. Of course, he just wants a stronger Europe, one that can stand on its own. But he also talks about multilateralism, of course, and maintaining multilateralism and keeping these communication routes open between the countries. And President Macron is speaking just a few meters away from us here at this second edition of the Paris Peace Forum. And of course, also a big topic here as part of this multilateralism topic is inclusive growth and how to make the economies work for everyone, in particular the middle classes. And as part of the initiatives that will be presented here today at the forum, there's this Business for Inclusive Growth initiative. And part of this, that started about a year ago at the first Peace Forum. Some businesses got involved in pledging to make growth more inclusive for citizens across the world. And this agenda was adopted at a G7 in Biarritz when France took the presidency of the G7 and made part of its own agenda. And yesterday was the first board meeting of this Business for Inclusive Growth. Several companies are part of it, about 40 companies. I employ 3 million people in the world. They have about $1.5 trillion of annual revenue put together. And these companies have Goldman Sachs, Henkel, BASF, IKEA, to just name a few. And this initiative is organized by the OECD, who will actually measure the impact of this initiative that will be led by these 40 companies. So we spoke yesterday to Gabriela Ramos, who's the G20 Sherpa of the OECD, and asked her why this initiative and why now. Take a listen.
Our economies are not growing as they should. Productivity is not growing. Investment is not growing. And the trade tensions are really taking are having a very great impact in the economic prospects. So first and foremost, I would say that it's important that we tackle those issues, because this is having an additional element there in terms of how far the economy will really deliver in the way it is. But the other point, as you say, is the social discontent and the social fragmentation. And the problem is that these things are not unrelated. We cannot think about the economy as a compartmentalized issue, and the social is different and the environment is different, because it doesn't work like that. People that feel left behind by the economic system go and produce political outcomes that then makes it very difficult for the leaders to have the basis to take the hardcore reforms that we need to put in place. So I would say that if you ask me, what is the core to this issue? How can we move forward? I feel is that governments need to understand that we need to have equality of opportunities, that we cannot have distinctions because we say, okay, but why don't we invest in education? Yes, we invest in education. The OECD is really measuring educational outcomes. It doesn't matter. Education is not breaking the socioeconomic background of children. And you have then children that receive poor education because they are from poor families, and then they connect poorly into the labor market. So we need to break those vicious cycles, and there is a very strong effort to be done by governments. The problem is that we have in a context of very high political fragmentation everywhere. So it's a challenging stance.
So that was Gabriela Ramos, the OECD G20 Sherpa. And so at this event yesterday, at this first board meeting at this Business for Inclusive Growth, we had a chance to catch up for an exclusive interview with Emmanuel Faber, who's the CEO of Danone and so the chair of this initiative. And so we asked him about what concrete steps and what projects were they working to actually meet the goal of the pledge that they made. Take a listen.
We believe that inclusive growth is much needed as an economic model, both for economic but also social and political reasons. So we are going to work on three key directions. One is to ensure a better enforcement of human rights in our operations. The second is a more inclusive and diverse workplace. And the third is to make sure that we also have a positive impact along the supply chain, not only in our own operations. To do this, we have launched today an incubator of inclusive business models that will run microeconomic experiences and a financing forum that's related to the G7 for inclusive growth. Both have the ambition of coming up with new solutions, micro solutions. And we believe that with the support of OECD, we can inform the macro policies with these innovative innovations and business models.
Your 40 companies, your group together is really powerful. You employ 3.5 million employees, annual revenue of over $1 trillion. So you can have a massive impact. But you're all G7 companies. Do you need to create a global inclusive growth? Do you need to involve companies from China, from India, from South America?
Well, by definition, inclusive cannot have a border. It cannot have a wall. And already those millions of employees that are working with us are way beyond the G7 countries. Our supply chains extend to Asia, to Africa. They are everywhere. And we cannot make change in those countries without also the support of the local players, the governments, the NGOs, the companies that are in those countries as well. So you're absolutely right that whether this is through a dialogue or through an even more inclusive board, this initiative will grow way beyond the limits of the G7 countries.
And that was Emmanuel Faber, the CEO of Danone, and also the chair of this Business for Inclusive Growth group that is here present today at this Paris Peace Forum. We also had a chance to catch up for another exclusive interview with the CEO of Sodexo, Denis Machuel. And he said that companies need to rethink their priorities and make sure that the benefits from the economy and from growth come to everyone. And so I asked him, how difficult is it to meet this ambition, while at the same time meet investor expectations and bottom line for a big listed company like Sodexo? This is what he had to say.
This has been our DNA since inception. We've always thought, since Pierre Bellon founded Sodexo, that we could reconcile economic performance through growth and sustainability. And I'd like to give one example. Sustainability is, of course, the social part, but also what we do for the environment. And we've entered into a big action to reduce food waste. 70% of our business is around food services, and we have a major impact there. Today, 1.3 billion of tons of food are wasted by mankind every year. we have our share of responsibility. And when we engage with our clients, with our consumers, with our suppliers to reduce that food waste, we've committed to reduce our food waste by 50% by 2025. When we engage, we definitely are in something very concrete that's good for all stakeholders. The investors, because by reducing food waste, we are more efficient, and economically it pays off. But also secure what our consumers want, which is to reduce our environmental impact.
I was going to ask you that because, of course, catering is 70% of your business, and you say we need to be more, when it comes to the meals you serve, be more local, organic, and vegetarian meals as well. You say you need to educate the consumer. Again, how easy or difficult is that, as well as being a competitive business?
First, we're convinced that this is a competitive advantage, being at the forefront of that evolution, ensuring that we propose and we've vegetarian menus in all our menus, ensuring that as we do, we've entered into this Future 50 initiative. We have created a number of menus that include 50 new plants that will support biodiversity. By doing so, we respond to the need of many consumers.
And I was Denis Méchuel, the CEO of Sodexo, in an exclusive interview with us yesterday at this Business for Inclusive Growth meeting. And so they will be present here today at the second edition of the Paris Peace Forum, where President Macron is currently speaking, where again they'll talk about multilateralism, but also how to make globalization work for everybody and try to reform market economy to try to make it work for everybody so that protest and discontent and rise of populism can be stopped and slowed down. And so here you have companies, NGOs, international organizations gathering together to try to come up with solutions. They'll talk about small projects and little incubators that we will finance to try and come up with projects with correcting social, environmental issues. So we'll keep an eye for the next couple of days with all these leaders here present, and also all these organizations coming up with these solutions while we hear President Macron speaking just right now.
Certainly, Charlotte, and it's very interesting to hear from the horse's mouth, so to speak, from these companies directly, and what actual plans they're going to put into place to help work towards a more inclusive structure. And as you mentioned, in line with the multilateral framework that Mr. Macron has been pushing and talking about for so long, and looking to protect in light of the protectionism wave that we're seeing in the world. Thank you for your coverage in Paris. That was Charlotte bringing us those exclusive interviews from the Paris Peace Forum. All right, let's check in on European markets, and all four of the majors are trading slightly in the green, looking for some direction. The handover from Asia was pretty positive overnight, but we are trading slightly positive for most of the majors. FTSE 100 just a fraction above the flat line, about 4 points higher. Xetra DAX up about 1/10 of a percentage point. Right at the top there, we've got Deutsche Post doing very well, as Dialog Semiconductors. Some of the chip makers posting good results. Infineon, also one of them, posting better than expected results despite some of the weakness in the auto sector. Speaking of the auto sector, we've got Renault trading right at the bottom of the CAC 40, down about 2.5 percentage points after some weakness being contagion effect from Nissan in Japan, which posted an almost 80% drop in operating profit for their second quarter earnings. FTSE MIB in Italy up about 1/4 of a percentage point. But again, as I mentioned, autos a big theme today in Europe, especially on news that the White House may be considering postponing that decision with regards to auto tariffs on German automakers. Switching to foreign exchange, we've got euro trading slightly on the back foot at around 110.30. Sterling also trading a tad weaker today, down at about 128.30, about 1/10 of a percentage point weaker. We did have slightly lower than expected average hourly earnings. So those are just the metric for wage growth in the UK, coming in on the disappointing end of the range. But of course, political developments continue to drive markets there, and the pound and the FTSE 100 with actually trading a bit more positive today. Safe haven currencies coming off a little bit versus the dollar. We've got yen and Swiss franc trading about 1/10 of a percentage point weaker. In terms of U.S. futures, the three majors are seen opening up a little bit weaker. We've got S&P down about 4 points, Dow down 30 after yet again eking out another record high yesterday. Boeing, one of the main names helping to propel that index higher. NASDAQ down about 8 points. All eyes on President Trump's speech later today in New York at the Economic Club, where he's expected to talk a little bit more about the trade discussions and how things are going between the U.S. and China. So stay tuned for that. So definitely will create some headlines and some trading opportunities later this afternoon. Now, in Germany, the head of the BDI has told CNBC in an exclusive interview that the ongoing trade war and Brexit are the biggest external risks to the to the German economy. Annetta also asked Dieter Kempf if now is a good time for Germany to unleash fiscal stimulus.
We have quite some room for investment. We have enormous taxes in Germany, and the finance minister has a lot of money to spend, tax income from his point of view, more than expected all the time. Just the last estimate was a bit lower than the estimate before. On the other hand, we are lacking huge investments.
Interesting comments there. Annetta joins us live from Berlin with more, presumably from that interview, Annetta. And I just want to pick up on what he said, that tax income is higher, but there's certainly a lot more leeway when it comes to German investments. So what more can you tell us?
Well, actually, here on the ground in Berlin, it's all about innovation and also what is next for the German economy, because clearly Germany is perhaps at the crossroads. One can say other parts of the world, like China, are storming ahead when it comes to digitalization, artificial intelligence, and Germany is trying to keep up. I spoke also early on with one of the poster child, so to say, of the entrepreneur landscape in Germany, which is the founder of BrainLab, Stefan Filsmeier, about also his idea of the US market and where his company is going to make most of their profits. Take a listen.
The United States, in fact, is our most important and biggest market. It contributes 43% of our revenue, and we are also, the strongest, company in our space in the United States. So therefore, the efficiency pressure on the system is actually an opportunity for digital technology, and I also think that despite of the push for digital transformation, healthcare cost has gone up. But I think that Congress has really reacted, and by promoting this, anti-data blocking rule, and with huge fines and public shaming, I think it will force hospitals to provide better access to digital data for patients, and will also force many large companies to change their business models to more an open digital economy that really allows us to reap the fruits of digital technology in healthcare.
So digitalization and open shared platforms are the future and are key for many, many industries. And BrainLab is doing that, especially in the healthcare sector. They are market leader when it comes to operation software, and especially the US market is very important for them, but China as well. So, and in another part of that interview, I thought it was very interesting to hear as well from him that given the geopolitical tension, also the BrainLab CEO is concerned about a disfragmentation of the markets, because it would clearly be less efficient and less beneficial also for patients and the healthcare system as such. So it has wider implications. It's not only about cars, it's actually touching every aspect, so to say, of our everyday life as well. With that, back to you.
Excellent, Annetta. Thank you for bringing us the latest from Berlin there. Another big story in Germany, U.S. private equity firm Cerberus is pushing for Deutsche Bank chairman Paul Ashleitner to step down, according to CNBC sources. Cerberus is among a number of other international shareholders who are disappointed in Ashleitner's performance, particularly after the failed merger attempt with Commerzbank. The U.S. private equity firm holds a 3% stake in Deutsche Bank and also owns shares in Commerzbank. And we're just going to take a short break, but coming up on the show, back to the skies. Boeing shares get a lift after the plane maker signals plans to restart deliveries of the 737 MAX. But some airlines remain wary of the long grounded jet. We'll have more in just a few moments.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1.
It's another Tuesday morning. Yet another chilly day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Ends today. Book at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
O Romeo, Romeo, wherefore art thou Romeo? Deny thy father and come to the shops with me. We can get 10% off 2 big shops a month with the new Tesco Club Card Plus. Oh, and 10% off your favourite Tesco brands, including F&F in-store every day. All for $7.99 a month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online today. £200 max spend per shop. In-store spend only. Club Card app required. Exclusions apply. See online for details.
No one wants to wait and wait and wait for that perfect phone. Thankfully, the Tesco Mobile Black Friday event has started already. You can find loads of brilliant phone and SIM deals with low monthly prices and big savings, including time-limited weekly deals. Tesco Mobile's best ever Black Friday event is on. Go in-store or search Tesco Mobile. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products and length of promotional period. See tescomobile.com/terms.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today. In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
Welcome back to Street Signs. Shares in Boeing jumped after the U.S. airplane maker said it expects to resume deliveries of its grounded 737 MAX jet next month. Boeing added it is planning on the plane to return to commercial service early next year. So Boeing stock was up almost 5% yesterday in trading on the news. And elsewhere, Disney wades into the streaming wars today with the launch of Disney Plus. The platform will house a library of content from Pixar, Star Wars, and Marvel, while Disney will also release 9 new original shows. Elizabeth joins us now, entering into the streaming war. Today is the launch of Disney Plus, and I believe they're launching in U.S., Canada, and Netherlands.
That's right. They've done a pilot in the Netherlands, but it'll be coming to other countries later this year, and then European countries mostly next year. But the U.S., this is the big, kind of much anticipated streaming war entry that we've been talking about with Disney Plus. This service is $6.99 a month in the U.S., or it's $12.99 bundled with Hulu and ESPN Plus. There's a lot of talk about how that bundle is really something that Disney's looking to go after. That pricing puts the Disney Plus better than Netflix, which is at around $12.99 for its main standard service. So the key thing that Disney's got here is it's undercutting a lot of that competition, maybe besides Apple, which we saw was about $5. But of course, Apple only has a small array of original content so far. The key advantage here with Disney is its content. It has a huge selection of content that has a lot of popularity.
Well, I was going to ask you about that because I was looking at the figures for the morning show on Apple Plus, and apparently it is going to cost $300 million for 2 seasons, about $15 million an episode. So they are spending heavily to get the eyeballs to watch the show, whereas Disney are already coming today. They're launching with thousands of movies already in their content. They've got a lot of content to deliver already to begin with.
Absolutely, and they have content that appeals to a huge range of an audience as well. They have the classic Disney movies, Pixar, very attractive for, say, a family who wants to just add on $7 a month to have the Disney library of classics, along with Marvel and Star Wars, so which we know have huge fan bases in the box office, so likely that'll be a big draw there. All of these companies are spending massively on original content, and that's one of the key things to see where this race will ultimately play out. How much do they have to spend in order to keep the viewers and get those new shows on board?
But Elizabeth, is it just primarily targeted at kids and families, or are they looking to get to a different target market as well?
This service is certainly trying to get to a different target market, and that's one of the things we see with the Hulu and ESPN bundle. ESPN obviously geared towards that sports audience, and Hulu gives you access to watch, streaming from NBC, CBS, other networks. So that's really a broad-based appeal to say this could really serve as a replacement to your traditional cable markets. And one of the themes we've heard, for example, from Netflix CEO is that all of these streaming competitors are still the biggest competition is still the linear TV, the traditional cable providers, and that's the race that's really playing out.
For now. You've got to see how it plays out in the future. All right, Elizabeth, thank you for breaking it down. Disney Plus, not yet in the UK, but I'm sure it's coming here very soon. All right, a quick look at U.S. futures, and the three indices are called a little bit lower, bucking the trend with what we're seeing in Europe today, which are, for the margin, mostly higher. But that is it for our show. I'm Jemana Versace. Worldwide Exchange is coming up in just a few moments. Stay with us.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
Robinhood believes now is the time to do money without the commission fees, so you can start investing today, wherever you are, even hanging with your dog. So, what are you waiting for? Download now and get your first stock on us. Robinhood.
Okay, you ready?
Yes.
Now.
A Peloton? Give it up for our first time ride.
All right, first ride. I'm a little nervous, but excited. Let's do this. 5 days in a row. You surprised? I am. 6 a.m. Yay.
Rising with the sun.
That was totally worth it.
Let's go race in Boston. 50 rides.
She just said my name. A year ago, I didn't realize how much this would change me. Thank you.
This holiday, give the gift of Peloton.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Think you need to buy expensive skincare products to see dramatic results? Try Olay Skincare. Just 1 jar of microsculpting cream has the hydrating power of 5 jars of a prestige cream, which helps plump skin cells and visibly smooth wrinkles, while new Olay Retinol 24 provides visibly smoother, brighter skin. For dramatic skincare results, try Olay and complete your routine with the Olay Eye Collection. Brand power helping you buy better.
I'm making it possible to breathe on Mars.
I'm helping make jet fuel from mustard seeds.
Estoy produciendo equipo de protección que mantiene héroes a salvo.
I'm making a digital twin of this analog factory.
At Honeywell.
At Honeywell,
we make lots of incredible things.
but mostly
We make the future.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining in style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
Today, CNBC's exclusive Upstart 100 list revealed innovative new names in healthcare, retail, cybersecurity, and more. See the complete list 9 a.m. Eastern at cnbc.com/upstart with on-air coverage at 11.
Understand, all these leaks about the trade talks are coming from the Chinese side. For some reason, the U.S. media treats China as somehow more credible than our own government. Even if you hate Trump, it's pretty crazy to treat the Chinese Communist Party as a credible source.
It is now 5 a.m. here at CNBC Global Headquarters, and here's your top 5 at 5. Will the force be with Disney and streaming? The House of Mouse unveiling Disney Plus today as the competition hits new heights. Saved by delays? Maybe. Reports this morning the president will postpone a decision about tariffs on one of the U.S.'s largest trading partners. The crisis in Hong Kong. Another day of unrest rocking the city. The CEO, Carrie Lam, slams protesters for paralyzing Hong Kong. Goldman Sachs responds. The investment bank issuing a statement in response to allegations over gender bias as part of its Apple credit card approval process. And Burger King out with a rebel yell this morning, launching a new meat-free Whopper overseas as worldwide exchange begins right now. You were hoping for a little bit Billy Idol at 5:01 in the morning. I know you were, and we always deliver. Well, good morning, good afternoon, or good evening, and welcome from wherever in the world that you may be watching. I am Brian Sullivan. Thanks for being with us here on this Tuesday morning. A little cold out there. Bundle up. All right, well, the Dow is up 18% this year, and it might continue to rise today. I say might because futures, they're basically flat right now. Came in, they're up about 35 or so. We're basically up 10 right now. So no real clear indication, but we've had 9 record high closes so far on the Dow this year. Today, if we get a little momentum here, could be the 10th. Bond yields. Well, as stocks go up, yields continue to go up as well. People selling bonds, which means the yields are spiking. The benchmark 10-year kind of creeping closer to that 2% level, where we'll call it 1.94%. In Asia, Japan. You've heard us talk about it for weeks now. That market continues to rip higher. The Nikkei up another 0.8%. That is at a new 52-week high, kind of inching toward the 2018 highs as well. Despite the unrest in Hong Kong, that market, probably supported by government buying, continues to rise. And in Europe, if you're noticing a trend, there is a lot of green on your screens this morning. All the 5 major averages, they are higher today. Markets around the world, they are up. All right, we are going to get more on all these markets in moments right now. Let's get to arguably one of the biggest product releases ever for one of the Dow's biggest companies, Disney. Disney Plus. It's here, finally reaches the masses. Elizabeth Schulze joining us now from London with more on what is going to be, if not another entrant, maybe the biggest entrant into these streaming wars. Elizabeth.
Hey, good morning, Brian. That's right. Disney officially entering the streaming race today with the launch of Disney Plus. The House of Mouse is looking to capitalize on popular franchises like Pixar, Marvel, and Star Wars. Pricing is, of course, the key detail here. Disney Plus will cost $6.99 a month or $12.99 bundled with Hulu and ESPN Plus. Verizon subscribers with unlimited plans can also get the service free for the first year. Now, this pricing is highly competitive against other players in the market. Apple TV Plus, which launched earlier in the month, is $2 cheaper, but with a lot less content, at least so far. Netflix has steadily been increasing prices to invest in original content, and its most popular plan is now $12.99 per month. Don't forget HBO Max and NBC Universal, owned by CNBC parent company Comcast, will also be launching streaming services in coming months. Netflix still the clear leader in streaming with more than 150 million global subscribers. Netflix CEO Reed Hastings has actually downplayed new competition from Disney and others, saying streaming, the real threat here is linear TV. But there's no doubt, Brian, investors are going to be closely watching these subscriber numbers as this media giant makes this big bet on streaming. The shares have had a pretty good run so far, up 25% so far this year, Brian.
Okay, I'm not done with it yet, Elizabeth, because here's the thing. I mean, yeah, we've got the Netflix competition. You got HBO Max and a bunch of others. But Disney also owns part of Hulu, which is kind of a competitor to Disney Plus, but yet they also own it along with our parent company. Where does Hulu fit into all of this?
That's right. So there's the subscription monthly fees that we just talked about. And then there's this whole ad model that's also really important. In Hulu, as we know, a majority of people who have Hulu actually subscribe for the model where you don't have ads, 70% according to eMarketer estimates. So what we know here is that this ad model is increasingly important, and that's against other competitors in the space. Now, YouTube, for example, fighting over digital video ads. We also know that that'll be a big focus with NBC Universal streaming service launching next year. So in addition to the overall prices for the subscriptions, we're going to be looking closely at how these companies approach ads on the platform, especially when it comes to some of that live content, that ESPN Plus bundle with Hulu on the Disney Plus offering. Key thing to watch going ahead here, Brian.
Yeah, it certainly is. But I can tell you this much, Elizabeth, if you've got kids of a certain age, or maybe if you got kids of not of a certain age, and like Star Wars, they got a lot of offerings, it's going to be a big one, Elizabeth. Thank you very much. All right, let's get a look now at some of the other top stories that we are following for you on this Tuesday morning. Tensions in Hong Kong, they are escalating once again. This after police there fired tear gas into the central business district. China is saying that stopping violence in Hong Kong is an important move after the U.S. condemned the use of force one day after police shot and critically wounded a protester. City CEO Carrie Lam also speaking overnight, saying that the protesters are, quote, paralyzing the city and that they are selfish. Well, staying with news out of China, auto sales there down again in October. This marks the 16th straight month of declines. Sales dropped nearly 6% from a year ago, in part due to sluggish demand for electric cars. The October figures were a slight uptick from September and better than double-digit drops in the previous month, if you are trying to find some kind of silver lining there. And Goldman Sachs is denying allegations of gender bias over credit limits for its credit card with Apple. The bank announced yesterday it will, though, reevaluate credit limits for Apple Card on a case-by-case basis, particularly for those who receive lower credit lines than expected. In a statement, Goldman Sachs says, quote, "We have not and will never make decisions based on factors like gender. In fact, we do not know your gender or marital status during the Apple Card application process." All right, back to the markets. A big week shaping up in what has already been a big year. The president set to speak today at the New York Economic Club, and Fed Chairman Jerome Powell will testify before Congress tomorrow. But what does this all mean to a market that's already at record highs? Joining us is James Liu. He is founder and head of research at Clearnomics. And James, is it too much of a sort of Tuesday 5:07 a.m. morning stretch to say that this is a market that appears to be firing on all cylinders right now?
Well, it does appear that some animal spirits are back and that there's increased optimism in the market. You have not just indices at all-time highs, but maybe more importantly, interest rates have bounced back. The 10-year close to 194. You have a re-steepening of the yield curve. And when you look across history at both the late 90s and during the mid-2000s, when you had this re-steepening of the yield curve, that did extend the market cycle and also the rally by a couple of years.
Are higher 10-year yields good for equities?
So we think they reflect significant optimism, especially around things like trade deals. And it's really the shape of the yield curve. So you have a yield curve that is a much more normal shape, partly because the Fed has cut rates a few times. And so on the flip side, of course, that's also propped up equities. So we are generally positive over the next 12 to 24 months. We think earnings can reaccelerate. The challenge right now, though, is that there's almost too much optimism in the market.
Well, that's the biggest risk. Too many people on one side of that boat.
That's right. Yeah, I think the prevailing narrative that's driving that is that if a trade deal is done, which is, of course, sort of this binary event in the market, if it is done, that'll lift up manufacturing, get us out of this manufacturing recession. We'll see GDP reaccelerate and therefore earnings reaccelerate. And I think the unfortunate fact about that is it's just going to take longer than expected. You're not going to see this overnight change in manufacturing. And earnings right now, analysts on Wall Street, consensus earnings are expected to be around 10% each of the next 2 years.
So
and we think that's probably too high.
Are people, the markets, are we being too optimistic vis-a-vis equities?
So we are generally still positive, but we think these 10% earnings growth numbers that are expected and are baked into valuations right now, we think that they're probably a little bit too lofty. Somewhere around 5 to 6% around the historical average for earnings growth. We think we could certainly get back there.
Should we be selling stocks then?
Probably not selling stocks. We think a neutral outlook on stocks.
But don't put new money in the market right now.
Well, I would talk about it from a portfolio allocation perspective. Whatever your neutral stock allocation is, we would stick to that for now.
Okay, so if you're at home and you've missed this rally the last couple of years, well, don't do that. But if you did do that, what do you do now?
Yeah, we would basically stick to that portfolio allocation that makes sense. If you did miss the rally so far this year, which was basically just a bounce back from that significant volatility that we saw 12 months ago, basically stick to your portfolio allocation. We'll make it up over the long run.
All right, but otherwise, things are pretty amazing what the change was. Remember the inverted yield curve in August? Everything was doomed. Yeah. Everything, imminent recession. God, we turned around, didn't we?
Well, the story points over the last 12 months really haven't changed that much. The only biggest one that's changed is the Fed. 12 months ago,
maybe a little more optimism about a favorable outcome on the trade fight?
Well, that's true, but that's also happened here and there over the last 12 months. If you go back to March, we were talking about tariff deadlines and maybe some deal would get done. And here we are in November, and we still have the same headlines. So really, the only difference is that the Fed has become very dovish over the last 12 months. It's like a 3-hour-long French movie. You keep waiting for something to happen, but it just never does. Exactly
James Liu, thanks very much. Great to see you. All right. Well, where's the beef? Apparently not with Burger King, and that's a good thing. There's a lot of interest in Burger King in launching a new meatless burger, but Rahel Solomon, it's not going to be here just yet.
Not yet. And I'm also wondering, what kind of movies are you watching, Brian?
I'm so bougie.
Yes, you are. Moving on, Burger King is bringing a plant-based burger to 2,400 locations across more than 20 markets in Europe. But yes, it is not the Impossible Whopper. That's become sort of a hit here with customers in the U.S. The Vegetarian Butcher, that's a Dutch company that was bought by Unilever last year. Well, they'll supply the new soy-based Rebel Whopper. Burger King tested the burger and another meatless sandwich, the Rebel Chicken King, in Sweden this summer. The Vegetarian Butcher sells its products in 17 European countries, including plant-based chicken, hot dogs, yum, sausage, and even tuna. The Impossible Foods burger has not been approved for sale in the EU because it requires further testing, because it includes genetically modified ingredients. So here in the U.S., Burger King will start testing Impossible patties in its hamburgers, cheeseburgers, and Whopper Jr. in 5 markets: Milwaukee, Cedar Rapids, Augusta, Georgia, Cincinnati, and Buffalo. Burger King's U.S. same-store sales rose 5% in the third quarter. That's the biggest increase since 2015, and shares of parent company Restaurant Brands and Unilever, as we can see, are both slightly higher this morning. Brian, I'll send it back to you.
Favorable reaction there. I find it interesting, Milwaukee on that list, arguably the sausage capital of the United States,
Maybe
going for a little
anymore.
meatless action.
Maybe not anymore. Things are changing, as you just heard there. Things are quickly changing.
They really are. Wow, meat in tube form, struggling. Rahel, thank you very much.
Sure.
All right, when we come back, a sigh of relief as President Trump reportedly considering delaying a decision about tariffs on one of America's biggest trading partners. Plus, Instagram taking new steps to keep users from stalking one another. And later, trouble in the skies, Southwest Airlines becoming the latest target over questionable safety practices. That important story ahead. And we're back right after this.
Sometimes the pressures of today's world can make it tough.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
It's another Tuesday morning. Yet another chilly day.
So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways. With flights and 7 nights hotel from just £349 per person. Don't miss out. Ends today. Book at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
All right, good morning and welcome back. It is 5:15 on the East Coast. Supposed to get a little cold today, so bundle up. Dow futures right now, they're up about 19 points, looking to make their 10th record high close in the Dow this year. Well, President Trump